Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now today I wanted to talk about the Australian dollar. This is a currency that we see offering opportunities both on a 2 to 4 week trading horizon as well as a longer 6 to 12 month horizon. Now before we get to our view, a little bit of trivia about the currency. The Australian dollar may now be one of the world's most traded currencies, but it remains a relatively young currency, having been created in its current form only in 1966 to replace the Australian pound that was originally pegged to the sterling. The biggest controversy at the time, though, was over the name of the currency. The public suggested a number of possible names: the Austral, the Oz, the Kanga, the Emu or the Koala. The Australian Prime Minister of the time favoured the Royal, but this proved to be so unpopular that they quickly settled for just the Australian dollar that we know today. Now call it what you will, but today we do see a strong case for the Aussie dollar, both short and long term. From a long-term fundamental basis, commodity prices have always been a key pillar of support for the Aussie, hence the ongoing strength in commodity prices broadly is a key positive. In China, which remains a key export market, the shift in policy towards being more supportive of growth, of course, is another supportive factor. More than just exports, though, the rising signs of the post-COVID economic recovery is gaining momentum. The best example of this is the relatively strong improvement in wages and reported unit labour costs, demonstrating what we see as a recovering labour market. Now, Australia's central bank has been relatively relaxed about tightening in response to improving growth and rising inflation, but consensus is gradually moving in to price a rate hike later this year. We have the minutes of the last policy meeting due later today, and we think that will be quite important to gauge current thinking amongst policymakers. Now, in our view, the Aussie dollar is lagging many of these improvements in fundamentals, and that's why we believe it's setting up an attractive long-term backdrop. That's the long-term context, of course, but two additional factors make it interesting as a short-term trade versus the dollar. The first is investor positioning, which remains very short, near record lows in fact, and in simple terms this means investors currently have very little long Aussie exposure, giving them plenty of room to add. We believe this gives the Aussie more potential upside versus other major currencies. The second, of course, is technicals. And on technical charts, key support for the Aussie dollar sits around 71 cents versus the dollar. We recently opened a new short-term bullish Aussie dollar trade from just below this level and expect the pair to rise towards technical resistance near 73.5 cents. The surprise in US inflation data and the resulting jump in the US dollar so far has proved to be the only interruption to this trade. However, given the pair is back near key support, we still believe a bullish Aussie dollar trade offers an attractive risk-reward trade-off ahead of the next Australian Central Bank meeting in March. If you want to take a look at the specific levels on a trade, please do look for our daily FX Navigator publication. That's a bullish case overall, of course, but what could go wrong? We'd mainly worry about the US dollar. As the US inflation release day demonstrated, the main risk to a bullish Aussie dollar view is from economic data or Fed policy that triggers a stronger US dollar. So that's the idea for today, and we'll take a pause at that point. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks again for listening, and we wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.